going in 30 seconds here, probably. I got no producer. What is going on, everybody? Hopefully, you guys are doing well out there. That is right. It is a, what is it? It is a Thursday night here on Equity Empire. I got no producer. My brother is normally here producing the show, putting up the comments in the background. He was in San Francisco at a baseball game. My guess is a single guy is probably going to want to go out in San Francisco and have a little bit of fun. I've got an echo. I've got two different screens. We're doing a little bit of a sound check here. Hopefully it works out well enough. I've got a little bit of an echo. I'm not really sure it's coming from. We'll figure it out as we go forward. And look, hopefully you guys are doing well. Got an exciting show because we have Broadcom earnings. And Broadcom earnings are, look, in terms of semiconductors, it is the second biggest right now. I would say we have, Nvidia in the lead, obviously. AMD missed a release window for their latest MI chip, and that has put Broadcom in a beautiful second place in terms of semiconductors. We're going to go through the earnings on today's video. We'll also take questions as we move through the show as well. And we'll, look, we've got a lot to talk about, and obviously there's a lot going on. We've got Elon Musk dropping the E word or the E bomb on the president. Shares of Tesla down big time today. We'll probably talk in the back half of the show a little bit about Tesla putting up a big red candle. We'll see what happens with this later. But, whenever you have these kind of drama filled moments, you always want to come back to the chart. Just look at the chart, see where the levels are. We'll certainly able to do that. But I do want to start with Broadcom. Broadcom earnings came out. I'm seeing in the after hours after reporting their earnings, shares are down about 4%, down to about $250 per share. Very logical level for Broadcom to pull back to. So we'll see that here technically here in a moment. The most important thing technically with Broadcom is we made a new higher high over the past couple of days. The previous highs were back here in early January, late last year. You made a new higher high. So technically, there's nothing to be overly concerned about. This is looking absolutely fantastic. When you make a new high, you almost always come back and back test into the previous highs, and that's what we're doing. It looks like in the after hours with Broadcom. We'll talk about here later in the show. There's some clear areas of support if you get further pullbacks in this one. There are some clear areas here where at least in the shorter term would be pullback areas. I've got kind of a longer term or an intermediate trend on this one as well. And, look, here we go with Broadcom. Came out with those Q2 earnings. Over the past year, you've done well, up 96% on this one. Those of you that have followed me here from MarketWise, we recommended this one, maybe it was a year and a half ago. Can't exactly remember when that was. But it was, I think, $80 split adjusted. So you've done really well if you were in from the original recommendation. And look, this one's doing absolutely fantastic. Now, Q2 earnings came out, $15 billion, 20% growth year over year. We'll talk about the software and the semiconductor business. If you're not fully antiquated with Broadcom, they have, three different businesses. They have a software businesses, which is a combination of stocks or companies that they've acquired over the years. They have a semiconductor business. You could say some of it is legacy semiconductors for the telco industry and other industries, but also they have these high-end GPUs or what they call XPUs. So it is actually a pretty, widely diversified, stock. Now, they also gave us Q3 guidance as well. That is coming in at, here. Normally this gets cut out of the videos that you guys watch as I'm trying to find. Here we go. The revenue guidance, $15.8 billion. The Wall Street estimate was for right about $15.8 billion. The high end was for 16.7. So maybe some disappointment there. Low end was 15.3. That's still going to be 20% growth. Here's what I would say going forward with Broadcom, and we'll talk about it because I have an overview of the conference calls. Listen to the conference call We'll talk about that here in a moment. But here's the key thing with Broadcom is, where is the revenue going to peak out for this company? Is it going to peak out in a year or so in the $20 billion range? As Wall Street has this stock kind of approaching $20 billion worth of revenue and then peaking out. I will show you on the conference call that there are some estimates that it might go considerably higher than this. And so that is the upside with the stock. That is how things will continue to move higher. Now, as the conference call started, shares were down about 3.4%. I'm seeing again in the after hours, that's about where we're pulling back to. We'll see how these things settle out on a Friday. And then obviously with the drama with President Trump and Elon Musk, that may or may not be good for the stock market tomorrow. We'll wake up and have to see that. Now, their software revenue growth of 25% year over year. You'll see that here. They call it infrastructure software. It's primarily a combination of numerous businesses, but more recently VMware. Look at this, up 25% year over year. I'll show you in a moment. I think that business has like 90% gross margins or something ridiculous like that. This is all organic growth. So they did not buy any of this growth. And we'll talk about where that growth is coming from. Now, semiconductor revenue was 17%. AI semiconductors, this is the high-end GPUs that a lot of people are talking about. That is 46% growth. So this gives you a little bit of idea with Broadcom is they put up a quarter where they call Semiconductor Solutions. $8.4 billion is the total. But in terms of just AI, and I say just $4.4 billion. That is because Nvidia is doing, I believe, 35, almost $40 billion of revenue in a quarter. So this company is still got a long ways to go. They talk about AI networking where they do have a leadership position there. That was up 170% year over year. I gave some explanation points on that. Now, in terms of custom GPUs, they call them XPUs. They have 3 current customers. One that we know for sure is Google. That has been known for a relatively long time with this company. But more recently, it looks like it's been confirmed that Meta and TikTok or ByteDance are the 3 current customers that are shipping in volume. They expect that these 3 customers are going to deploy 1 million XPU clusters in 2027. But here was a really interesting thing that they said on the conference call was that these customers are doubling down. And given the urgent demand that they are seeing, that revenue might actually start to show up in the back half of 2026. So we actually might start seeing this revenue show up, not in 2027, but actually in calendar year 2026 because of the urgent demand. No comment on the other 4 customers, but those appear to still be in the works. And if those come on board, well, obviously more upside for Broadcom. They said that non-AI semiconductor revenue is close to a bottom. And again, I showed you AI revenue, $4.4 billion in the semiconductor business. And that's, I don't want to say only, that's only about half of their revenue. So the fact that the rest of the business is close to a bottom, you could see some growth there. And I say often I forget. This company actually has a wide variety of semiconductor products. In terms of guidance, 6.7 in the upcoming quarter is for software, 9.1 billion of semiconductor revenue. That totals $15.8 billion. Again, that met expectations. In terms of gross margins, your semiconductors is 69% gross margins. Some might, realize that's not low, but it's certainly not as high as maybe potentially Nvidia's revenue their gross margins. Part of it is because Broadcom has to remain competitive inside of the marketplace. And so you have software as well, 93% gross margins. Last year was 88%. So they grew their software business by 25% organically. So sales grew 25% and gross margins on the software business expanded from 88% to 93%. This is why this is a fantastic company. And they've bought these software companies more recently, VMware. It was like $50 billion acquisition or something. It was a big acquisition. The debt payments on that is less than 4%. I think it was 3.8%. So they financed these software business at less than 4%. They're growing at 25% organically, and they're printing 93% gross margins, folks. That is, this is what you invest in when you invest in stocks, right? Okay, not many of us, maybe I'm not going to, there's probably plenty of people in the chat that are great at business, but I know for a fact, I am not going to be able to go out in the marketplace, borrow money at 4%, grow a software business year over year by 25%, at 93% gross margins. I know I can't personally do that myself. Okay, I would love to do that, but I can't. Okay, this is why we buy shares of Broadcom, because now we're ownership of that, right? And it takes great leadership, which Hock Tan is the CEO. I mean, he's absolutely fantastic. And a lot of this has to do with his leadership. Q&A segment began. They talked about the 2026 XPU growth. That was probably the breaking news on the conference call, was that 2027 was when the demand was supposed to show up. But now they're saying it's potentially going to show up actually in 2026. And that deployment will start next year more than originally thought. So that's exciting. Now, can they sustain the semiconductor growth rate? What you have to understand with a lot of these, with a lot of these semiconductor companies and a lot of these analysts that get on these freaking conference calls, is all they want to do is plug numbers into an Excel sheet and create some kind of model and model out into the future. Okay. And this works for some companies, but it doesn't work for broad swaths of the stock market. So on these conference calls, you have these, MBA kind of Morgan Stanley type guys. All they want to do is clarify the numbers. And they said, hey, look, if you're going to grow into 2026 with the kind of addressable market that you've said you've had in the past, that would be a 60% combined annual growth rate. Broadcom CEO basically said yes to that question in a CEO type of way. He basically said yes. Now, AI networking revenue, that's accelerating. And look, this should come as no surprise to anybody. Networking and XPU, APU, those revenues go hand in hand. So that's just something that you have to understand, that as the XPU growth comes, so will the networking as well. And obviously GPUs as well. People are hooking up Broadcom to Nvidia systems or AMD systems or any types of systems. So it's not just their own custom revenue. Now, are they going to grow to $30 billion in AI semiconductor revenue in 2026? He essentially said yes to this question. And this is what brings into question, as you start to look out into future quarters with Nvidia, or excuse me, Broadcom, this is quarterly revenue. So we could probably switch this to an annual size revenue. But for a year, as you move into 2026, Wall Street is anticipating $70 billion in revenue. You look into 2027, they're anticipating $83 billion of revenue. Now, obviously, they have a software business over here that is printing a very fast growth rate. In fact, a faster growth rate than semiconductors, and it is at higher gross margins. So if you can continue to accelerate the software business and the semiconductor business gets to $30 billion run rate, well, things get really, really exciting. And this is just AI semiconductors, because some of you might be pointing out, well, they're already doing 8.4 billion in semiconductors, which would, if you analyze just that number out, that is $32 billion. So they are going to do $30 billion of just AI semiconductor revenue. Right now, they're only doing, I don't want to say only, they're only doing four. They're doing $4 billion. They told you on the conference call. They're doing $4 billion worth of semiconductor revenue, 4.4 in the most recent quarter. And the CEO got on the conference call and said, yeah, by 2026, it might get to 30. So when I put price targets out there of a $3 trillion company, and right now we're sitting at about 1.2, so not quite a triple, but you're probably close to $750 a stock. If these predictions or these forecasts are accurate, it very comfortably could get to that number for sure. Now, Hock Tan did not want people talking about service addressable market, or SAM, even though he's brought that up very explicitly in the past two conference calls. I thought that was interesting. The SAM that they gave out 6 months ago about 2027 essentially still stands. And they'll give an update later, maybe either this year or into next year. But again, some of that demand that they talked about 6 months ago originally is actually going to show up at the end of next year. So that is very exciting. There was some belief that maybe custom GPUs would only be good for training. That is not true. Customers are going to use them for both. Very, very interesting question when it comes to co-packaged optical connections. Now, I will tell you, on a scale of 1 to 10, when it comes to co-packaged optics, I'm at a scale of 3 or 4. Okay. Like, I'm definitely not one of these computer engineers. But one thing that as you are out there doing your research, what you're going to come across in the semiconductor industry is people that have very sophisticated takes on the technology. Maybe they work for one of these companies. They have a consumer or a computer science degree, or they're a computer engineer. What I will tell you is, if every computer engineer was great at understanding the technology and then applying that to investments, we would have no computer engineers. They would simply be investing in the stock market and they'd all be millionaires. So you have to be a little careful reading the geeky stuff on Substack, and I read it all. So don't take this as a criticism to any of these guys, particularly the computer engineers that are writing about this stuff. You have to take a lot of their opinions about stocks with a grain of salt, because they're very good at describing the technology. What they're not as good about is actually recognizing if that's a good investment or if a company will benefit or not benefit. But as it relates to co-packaged optics, right now, it's not really a major thing because you're continuing to use copper wire. But as the clusters get larger, so as the GPUs get larger and the data centers get wider and wider, and you have more and more stuff in a data center, what you have to do is you have to connect these things using optical cables, which is obviously moving things at the speed of light, because copper has latency issues, it has heat issues, and there's loss, there's different types of loss as you spread the copper wider and wider. So as these data centers and the clusters of GPUs or XPUs get wider and wider, you're going to have to use co-packaged optics. Broadcom has some options there. They say they have other options, not just co-packaged optics, and this will happen in a 1 year or 2 year time frame, where a lot of companies and a lot of data centers will start to switch to this. This is good news if you're an Equity Empire premium subscriber, because I believe the first small cap stock was a co-packaged optic company. So this is what we're trying to get you ahead of. And I will tell you, John has several other companies he's looking at in this space. That is because if you can get in early, this is not really my game with the blue chips. I'm not necessarily really trying to get you in early. I'm trying to get you in on trend so we can just make nice, comfortable returns. With co-packaged optics, you probably want to be early because you have like exponential returns. Not necessarily in the co-optic space, but you have Credo, which had, was very, very early. We recommended this one in, can't remember when it was either 2023, 2024. I think it was a $20 stock, and now it's at 73. So if you can get into these kind of semiconductor stocks before they blast off, especially the small cap ones, you can absolutely skyrocket. So the margins on the XPUs, those are going to be lower. That is because they have to remain competitive with Nvidia and obviously be an alternative to Nvidia, but still 60 some odd % gross margins are fantastic. Now, they talked about networking. Broadcom is on the Ethernet standard, and that is going to continue to be a standard. Nvidia has their own proprietary thing, but only certain customers are going to opt to use that. Outside or upside for XPU demand is due to what? And what they are saying is they are seeing a lot of customers build out inference for running large language models and software. This is very bullish for AI software. So this is something that we've talked about quite a bit, is that this is very bullish for AI software, the more that is getting built out. In terms of the rest of the conference call, I won't say there was a whole lot there, but very interesting conference call. In terms of the revenue, we talked about $15 billion, very profitable company. You have gross profit in the most recent quarter, $10.2 billion. They give you a quarter over quarter view here. Year over year looks even better. Here's the thing to understand about Broadcom. Very well run company financially. Look at your research and development fees a year ago on $12.5 billion. They were $2.4 billion. You've grown your revenues over the past year by 20%. Look at your research and development. It's up, but it's not up big time, up to $2.7 billion. Here's where Hock-Tan really cuts expenses. That's in selling general administrative. Look at last year on lower revenue, $1.3 billion. Some of that was VMware. Okay. They cut a lot of the, you don't need 2 sales staff. VMware will sell itself. Down to about $1 billion on the SG&A costs. Everything else remains about the same. Operating income, $5.8 billion. Last year was under 3. Last quarter, though, higher at $6.3 billion. They talked about how they had elevated inventory based on a November read. And that is because they're seeing increasing demand for their products. They continue to carry about $9.5 billion worth of straight cash. They do have a fair amount of long-term debt, $61 billion, but also on the short-term side, another $5.5 billion. So they're carrying a lot of debt, and they noted that, first of all, the interest rate on that is relatively low, but you also have, look, really, really, really strong revenues to cover those cash flows or cover those debt payments, which we'll show you here. When we get to cash flow, $6.5 billion worth of operating cash flow, not a lot to spend it on. They bought back some stock in the most recent quarter, including some from employees, which you have to understand is they had about $1.8 billion of stock-based compensation. So they're not retiring a massive amount of shares, but my guess is they were opportunistic during the drop in April. Hock-Tan is actually a former he's kind of has a Wall Street background. So my guess is he saw this drop in shares in April and he took advantage of it. They probably won't be taking advantage of the buyback as much when shares are up here at essentially all-time highs. Things look particularly good. You also get a dividend payment on this one. They reiterated that. I mean, you're only getting, I want to say only, you only get about a 1% return on this one, but it is something, right? Okay, so let's look at this one technically. Guys, it looks absolutely fantastic. There's nothing to be worried about with Broadcom. We just confirmed a new higher high. When you are looking at a stock chart, we'll clear up some of these lines here so you guys can just kind of see what's going on here. We'll change this line to a green line because you're actually trying to buy when you get to that line. Here's your trend. It's been intact since 2022. You can stretch this one out wider if you want, but we'll really just focus on kind of the more recent trend since 2022. You're looking for a series of higher highs and higher lows. You want to see them confirmed. Now, April is, a lot of stuff happened in April, right? Okay. So sometimes you have these, anomalies, if you will. Now, could we come back down here and retest these April lows? Absolutely. Okay. There's a lot of things that could happen. We'll discuss, we'll discuss some things here in a moment as it relates to Elon Musk and President Trump. Could things completely go off the rails with China and all that other stuff? Yeah. They even addressed that on the conference call. Hock-Tan basically saying, I don't know what's going on with the China sanctions, which is a refreshing answer. Okay. He doesn't know. Nobody knows. Okay. President Trump is obviously a wild card when it comes to that. Could we come down here and retest the lows? If we do, that's perfectly acceptable. We've just confirmed a new higher high. Okay. What you would like to see with Broadcom is you made some highs back here at about 249. It appears in the after hours. That's where the stock is trying to come back and have a resting point. This is perfectly normal. Perfectly normal to break to all-time highs and then want to come back and test this area. Now, will this area break? It's possible. You've got areas down here at 240 that appear to be support. Those areas are right here. Notice that this was kind of a resistance area before you kind of peeked your head above it. There's other areas in the 230 range, obviously all the way back on trend. If it happens very quickly, would take you back down to probably this support range here at about 223. The other thing you can do is slap on a fixed range volume profile. I actually don't know what this will look like, but let's just slap this on. Look at what it's showing you. Let me actually delete these lines so you can actually see this pretty well on your screen, because this gives you like, if you don't know how to draw trend lines, just slap on the volume profile. There's where people accumulated Broadcom stock. So if I say, hey, the downtrend's going to continue, it's going to come all the way back to the 230s. Okay. And I wouldn't necessarily want to wait till it gets all the way to the penny to there. Let's say you wanted 10 shares of Broadcom, right? Okay. Which would be a fair amount, depending on your account size. Some of you, with big accounts and you're doing really well, maybe you want 100 shares, you want 500 shares. Okay, so just scale it in proportion to this. But if I wanted 10 shares of Broadcom, I would, as it pulled back into the 240s, I'd probably buy 1 or 2 shares. Keeps pulling back into the 230s, mid 230s. I'm probably buying 3 or 4 more shares all the way back into the 230s. I'm full allocated there. That's what it's telling me. If it goes further down, I'm selling stuff on eBay and I'm cutting back on my expenses, and I am doubling down, tripling down at this area. And it sounds crazy, but that's what happened in April. Okay. I had some Broadcom, and then it went down and down and down. And I said, my gosh, what do I got to do? I got to, my kid's still 8, but maybe they didn't get a Lego set this much. Only because, you gotta take advantage of these opportunities. So with Broadcom, it looks like to me, if the pullback remains, you'll have opportunities back in the 230s on this one. And that's where you should take advantage of. So look, if you've got some questions, go ahead and drop them in the chat. I'm a one-man band on today's live stream. Made money off Credo. CLS is another one. This one had a really nice run. We can take the volume profile. Looks like it wants to come back up here and retest these highs back up at 140 on that one. You get a breakout above that. Whew, this one could get into the 160s. CLS has got as Broadcom and Nvidia go, so will this company go. It'll be volatile. As most of you guys saw, CLS was 130 and then it went to 57. And now here we are back in 120. And so you got to be able to, this is semiconductors. And if I brought up a chart of Tesla, it's the same type of thing. Semiconductors, Tesla, these things, are really, really volatile to say the least. AOSL, probably not one I'm super familiar with. What's the mark? Oh, that's why. I don't want to say only, but $700 million company. It don't really fall in my radar. This one looking kind of ugly technically. Lower lows, lower highs, but you did break to this cluster. I think you were wise, Mr. Pennywise, to take profits on that one. AVGO is one of my biggest tech holdings, mine as well. So I would say in terms of semiconductors, you have, I would say, the quad that you should center a lot of your investments around, and that is Nvidia, Taiwan Semiconductor, ASML, and Broadcom. Those would be the 4 that I would want to own. And then the rest around, if you understand those 4 companies, it should give you like almost an invitation to invest in about a dozen other companies. I would just take profits on the rest of those. Dollar cost average down to doom. It just depends. With these larger companies, here's what I would, respond to this comment. Okay. How has dollar cost averaging in AVGO for the last 16 years worked out? Okay. Right now, unless you bought shares of Broadcom today or yesterday, there's no one that has lost money buying shares of Broadcom. Okay. Now, when we're talking about penny stocks and small stocks, yeah, or even not even necessarily small stock. Look at PayPal. You know what I mean? Like, yeah, there's a lot of people that are stuck on this one. If you want to look at GameStop, you want to look at like volatility. This thing's up, down, up, down. This one's actually, it's actually held up pretty well after it's kind of pump. Quality stocks, quality management, dividends, buybacks. This is why I'm into the blue chip sector. This is why when you look at my watch list, the smallest companies on here are, multiple billions of dollars, hundreds of billions, of even a few $100 billion could be a relatively small company that I'm following. So dollar cost averaging doesn't work when the company is dog shit. When the company is amazing, then it works out very, very, very well for you. Okay. Look at Amazon. Amazon's the same thing. Amazon has been public since 1998. Also, another stock that if you dollar cost averaged in, you would be making money right now. Now, if you bought shares a month ago or, a few weeks ago, then maybe not. But for the most part, everybody's in the money on a stock like Amazon. You look at ASML, another stock that has been public since 1995. I think I was in middle school in 1995. Another stock that if you dollar cost average, particularly, again, this is why I set these charts up, is you are trying to buy these at the proper time. And if you do that, things are good. Things are good. Things are good if you bought ASML at 579. I mean, that was a fantastic area. Got an order at 190. Wonder if that's Broadcom. 190. Yeah, you might get filled. I mean, 190. If things go off the rails, you do have support for the shares at 185. So I could see 190. 190 wouldn't have me necessarily concerned. 190 could actually confirm. And you put this trend line on here, but what could be materializing is a flatter uptrend. So this is what happens when you go on these breakneck uptrends. You can't continue that up. I mean, this stock actually has continued kind of a breakneck uptrend for a very, very long period of time. But these things tend to flatten out a little bit. Yep. Broadcom, Nvidia, Taiwan Semiconductor in portfolio. That's fantastic. If you're in it for the long term, then that's great. Even if you're in it for the short term with Broadcom, if you want to make, here's what I recommend actually is have a long-term position in Broadcom, but because if you're watching a video like this, you're following this stock very, very closely, go ahead and trade around your position. So I wouldn't do this in the same portfolio. Okay. So you have your IRA or your 401k. I would lose the password to that. Okay. And barely ever look at it. Okay. But have a Robinhood account or a Schwab account. None of these guys pay me, so I don't really care where you have your money. I would just have it at one of the big guys. And, throw, for some of you, it might be a couple $1,000s. For some of you, it might be tens of thousands of dollars. Throw it in there. Broadcom pulls back to support. You're buying it there. You get the pop. Then you get the benefit of not only a 1% yield, not only the benefit of knowing technically where the stock stands, but you capture a little bit of short-term pop in the stock, and then you maintain a long-term position. That's what I would do. John, do we see Broadcom participating in robotics and physical AI the same way Nvidia or Qualcomm? Yes. Yes. I think the quick answer to this is yes, particularly as it relates to the data center. They're playing a very similar role as it relates to Nvidia. Nvidia has a slightly more software as it relates to AI or robotics training and doing different types of training with different software that they've integrated. But Broadcom benefits there as well. And so that's very, very, very exciting. I would say on device, Broadcom also benefits as well. They have stuff in Apple products. They have stuff in other cell phones and other, quote, smaller devices. That is being, I would say, undercovered and I probably haven't done enough research and enough communication on this, is robots are just simply a car and a cell phone, basically, in a new form factor. Now, obviously, a humanoid robot will do more than just a car and a cell phone do on its own. But it's basically a humanoid robot is as if a cell phone and a car had a baby, maybe with a human in there as well. Not to get X-rated, but boy, Elon Musk certainly went there. So I don't think anybody's, it's one of those days, right? And so anybody that has stuff inside of cell phones, anybody that has computer chips and technologies in cars will benefit when robotics become more mass produced. Now, when are they going to become mass produced? We are likely still years, plural years away, but it's not that many years. Not that many years. So that's very exciting. I hope that answered your question there. Pennywise's big tech holdings are pretty solid. Broadcom, TSM, Nvidia, Palantir. Let's take a look at Palantir. I saw that one slide today. I heard the CEO. The CEO's a great quote machine. This one's just confirmed a new higher high. If you're not in this one, a back test to trend at 108. See, when you watch live, you realize how much I cut out of my videos. A better pullback is 87 on this one. No, that sounds like a long ways, but these are, obviously very volatile stock. CrowdStrike, that was another one that I think had reported earnings, put up a candle. That also just confirmed a new IRI. My thesis on cybersecurity stocks is this is like the the Allstate and the insurance business. This is like Geico for like tech nerds. Like if you have tech, you have to have cybersecurity. You got a beautiful trend on this one. Just confirmed new higher high. Waiting for a pullback on that one for sure. Cyber, I think that's Cyber Arc, maybe. Yeah, Cyber Arc. This is one I've looked at a little bit. There's some lines on the chart. Confirmed a new higher high on this one. Look at that chart. I mean, my gosh, that's been attacked for 10 years. So, man, cybersecurity is absolutely great to be. And then Team. Listen, not one I'm super familiar with. $60 billion valuation. Maybe we'll add this one to the list. This one's looking okay. Made a new high. Haven't made a new higher high, but I would argue that if you're looking at this kind of in the shorter term, that's the trend you're looking at right there, with upside back to the all-time highs back at 450. Probably something fundamentally that's not allowing you to come back to the 450. Now, this one was in a beautiful uptrend. These uptrends do break. So you get in these longer term trend. This one held for about 10 years or so. And then it breaks. You do a back test, almost a trend, and then you find kind of a new trend. So nothing overly alarmed there. But just don't be alarmed. You own these stocks that are in these long trends. Eventually, they like to break. Google and Amazon. Oh, we love both of those. Clover. Is that the new one? Yeah, Clover Health. Have upgrades from hold to buy on the Fidelity website. I would just caution you a little bit. The buy and sell ratings. Who knows what they might have clients that they're trying to whoa, my God, what happened to this one? It's the right ticker. This one looks wow. So I mean, you got some volume down here, but this is why I don't invest. This is a $12 million company. This is why you don't see me talking a lot about small caps. I leave that to John, because I cannot handle that. But I do like, let's go back to Broadcom. I do like the opposite, which is that. Very easy, very simple. But boy, if you have the stomach for that, there's certainly some money to be made. Okay, it says ACI, which is Albertsons. I think it's like a grocery store chain. Hit support. Did look like it did a little support. Depending on who you ask, that's either support or resistance. There's definitely support here at 19, and there's hard support. I'd be interested in this one back down here at 17.5. This is for kind of like a longer term swing trade. I could see playing this. There's some consolidation here. And if you break above this area at 22, you're probably retesting 25. But I like this one a little bit lower. Sound, I think that's Soundhound. What I would say about Soundhound is I was at the Consumer Electronics Show in Las Vegas. This was back in January. After I was in Soundhouse booth, I almost shorted the stock. It was not very what were they, how big is this company? $3 billion. It didn't look like a $3 billion company, but that obviously doesn't mean anything because you've just confirmed a new higher high. This one's actually not in a bad spot. Buy and hold guy, that's what I am. Yeah, CLS, I would say it definitely like a trading position. Palantir CEO is a report all about his lies. He's always telling more about the downside and always lie. Yeah. Well, I mean, I will say there is something about having a CEO that is out there, pumping the stock. And some people will criticize Elon Musk as well. And they'll say he lies. He said the Cybertruck was going to be 50,000 and it was going to come out in 2022. And it's like, or robo taxis or full self-driving was going to be available 3 years ago. What you have to understand about a CEO is they are not always communicating to you. They are not communicating to Wall Street. They are communicating to their employees who do all the work. These CEOs, let's be real, they're not doing a lot of the day-to-day work that is required to make these stocks go up. And so the way you motivate, and one way to motivate, and there's been plenty of research and plenty of books on this, one way you motivate is you set absurdly high expectations and targets and you do it publicly. It's just like if I wanted to lose weight, let's say I wanted to lose weight. The best way for me to do that is get on a live stream and say, guys, By August, I am going to be 20 pounds lighter and I'm going to be able to bench 200 pounds. Because now all of a sudden I have everybody watching as they're going to hold me accountable. And when employees see the CEO get on Bloomberg or get on CNBC or on conference calls and make promises, it lights a fire under them. And here's what I want to tell you guys. You want to, when you're investing in stocks, you're investing in the management, you're investing in leadership. Do you want the leadership of your companies being lazy and being like, oh, well, we might do it in 2026. We might get to it, or give vague targets. You give vague targets, you get vague results. You give aggressive targets, you are going to be wrong a ton of time. But at the same time, you look at the chart of Tesla. I don't know. That looks pretty damn good to me. Look at the chart of Palantir. A little more ups and downs, but it looks almost the same. Aggressive leadership, aggressive targets. There's some nuance to this stuff. Did you see Nvidia's vision of tokens or AI factories coming to fruition? Is that consumption model feasible? Can you expand a little bit on what is next post hyperscalers? So I believe, John, we've got years and years and years left of growth that is going to be required in order to sustain just what's going on in AI right now. So if you're on like a chat GPT, which I don't think I have a login on my I don't have a login to it on, oh no, I do. But if you tried to create like an image over here, like make me a magazine cover or whatever, it's going to say, hey, I'm going to get started. And then look what it says. Lots of people are creating images right now. So this might take a bit. We'll notify you when your image is ready. This is obviously not what ChatGPT wants to do. They want you to be able to press an enter and get something. Okay. So there's not even, and the reason why they have to do this is they don't have enough compute power over at ChatGPT. Okay. Now, if I paid $20 a month, maybe the images pop out right away. But this is just showing you they don't have, I mean, this is like going to a Google search and me typing in a Google search and being like, hey, and Google returning, hold on a second, we're getting too many queries right now. We can't fulfill it. So this is the same thing. It's showing you they have excess demand. Now, there was that Google video AI. It's called VO. What's it called? Yeah, VO. So there's this AI video generator by Google. And so it's creating these AI things with video. This burns up the GPUs. In fact, Sundar Pichai, who's the CEO of Google, basically said this on Twitter this week, was this is just burning up their GPUs. And these are only creating very, very, very short burst of video. And this is the future. I mean, this is now, but it is going to expand. What's going to expand on this is obviously huge amounts of compute power. You need you need to do this at scale where everybody can come to VO and make not just 2-minute videos, but like hour-long videos. Google has to invest hundreds of billions of dollars for the next several years just to support this right here. Also, ChatGPT has to invest hundreds of billions of dollars over the next several years just to get us to where it could service this image in less than, this was probably 60 seconds that went by before it gave us this image. Okay. So just to handle video and memes, we are looking this is not just my estimation. This is through the research I've done. You need years of investment. This is just for memes and video, let alone cure cancer or run robotic systems. It's very like, here's the thing about robotics is like to run a single robot is one thing, but what's going to happen is you're going to have companies out there running potentially millions of robots all at the same time. That alone is a very, very challenging thing from a computer system perspective. Think about having 1 million employees just as humans. What that presents to, if you were the operational manager of that, what kind of challenges that would present. Now we're talking about 1 million computer devices that are out there doing human-like things. the amount of compute and software and everything that is going to be required for that is mind-blowing. I would say just the video portion of AI is a mind-blowing amount of investment. And so I believe that if to use a baseball analogy, there are 9 innings. We got a lot of people that watch around the world. Not everybody watches baseball. There are 9 innings in a baseball game. In terms of where we're at with AI and spending with Nvidia and Broadcom, and look, Broadcom addressed some of this on the conference call, that they basically have accelerating demand and that the customers are actually doubling down and they have urgent demand. When I listened to the CoreWeave conference call, they said the demand is relentless, which literally means that they have so much demand they can't meet it. I think we are in inning 2 or 3. You know, some people would maybe even say the game hasn't even started. We're just in batting practice. Because what I will keep saying is, if AGI or artificial intelligence is the goal, if creating full-length movies with AI is going to be the thing, if being able to press an enter and getting a meme is a thing, we still need lots and lots of compute. I mean, so much that it's hard to really wrap our head around. And if curing cancer and creating medicines and doing all that stuff is also going to be done by AI, that alone needs its own set of compute. And then if we start talking about robots and millions of them, like Amazon doing 1 million robots delivering packages, which was a news story this week, we are a long, long way from even approaching demand. Now, demand will peak, or maybe a better term, demand will plateau, but I actually believe that will sustain itself. So let's just imagine that Broadcom, plateaus at $100 billion of revenue. What will be apparent at that time is that $100 billion will sustain itself for many, many more years. And that will support the valuation at that time. That maybe you don't have this 20% growth or even mid-teens growth, but you can look at a stock like Apple. Apple's a great example. Look at Apple's growth rate. They're doing $430 billion in revenue. They're growing at obviously you start growing bigger numbers, even 5% of a big number is a big number. But you got to, you're still got a $3 trillion valuation at Apple, and their revenue is plateaued. Okay. And so the same thing's going to happen with semiconductors. We're get a plateauing effect of their revenue, but what will be apparent at that time is that plateau will be able to sustain itself. Very similar to Apple's, sales have plateaued more or less, and it will sustain itself. That is my opinion. Yes. Never comb your hair. I never comb my hair. Are they supposed to grow their AI revenue from 20 billion to 60 billion in 2 years? So right now we're talking about AI revenue. AI revenue is currently $4.4 billion in the most recent quarter. You want to annualize that number out, we'll make it easy on the math. We'll say 5 billion. So yeah, you're going to go from 20 to 30. So they talked about a $30 billion number, and that came from a analyst saying, are you going to grow to $30 billion in AI semiconductor revenue in 2026? Hock Tan danced around the question, but he basically said yes. Again, that's my interpretation. You can go back in the conference call, do a find and replace for $30 billion and see how you interpreted it. But as I was listening to him, I said, well, he basically said yes. And that's what you have to do with these CEOs. They're obviously not going to answer that question because it's basically them giving guidance. But he basically said yes to 30 billion. And that's in 2 years, maybe even a year and a half. So the answer to that is yes. Team is mostly used by product people and software engineers, with junior level engineers getting destroyed by AI. Team might face some challenges. Yeah, I don't really know. I tell you what, when I know about a stock, I know about it. When I don't know about a stock, I literally know nothing. And this is one I don't know much about, but it's 57 billion. So I'm going to put it on my list here. Let me put it actually in here. If it goes on my list, then I'll look at it. Now I'll read through. For me, it's like some of you might be wondering, well, when you say you're going to look at it, what do you do? So what I like to do is I like to come back to the last earnings, which looks like, oh, sorry, this is still Broadcom. I didn't get a switch out. Oh, what's wrong with my computer? Well, it might have to short Apple, guys, or at least short the Safari browser because it's not doing anything. Here we go. So when I look at a new company, what I like to do, so this is cool on Seeking Alpha, and I don't have a relationship with Seeking Alpha. It's a site that is worth paying for. What I'll say is tricky about Seeking Alpha is like if you want to make decisions off of this website, off of the analysis, this is a different story. Everybody's basically saying the stock is a buy, at least in the last month or so. It's tricky because you'll have, every other article is either a buy or sell. So you still have to make the decision for yourself. And the way you would make that decision for yourself, I like to read through these transcripts, and they go to these annual growth conferences. This is better than a conference call, like a quarterly conference call. Just come through here, read this. You can put this on audio or whatever if you're more of like a kind of a listener. Or you can throw this in AI too if you want and just have it summarize it for you. But I sit here and I would read through all of that. I would read through this other one, just get a general sense of what's going on over at this company. Then I would dip back into earnings. Then I would look at expectations. Then you get to P. Some people look at PE and all that stuff. I look at it a little bit, but I kind of back my way into it. And then the last thing I would look at is the stock chart. And talk about kind of what we did. Hey, you were on a breakneck pace. You broke down. I would want to figure out what happened between 2021 and 2022. Something obviously happened here fundamentally. It could have been just the market was in the shitter at that time, but something probably fundamentally happened. But now we're back on a new uptrend, and this could be actually an area of a buy, just technically. That's what I see. Thoughts on Lulu? That's a great question. So actually, I'll be honest with you. I haven't had full chance to look at Lulu, but I will read through the conference call. And I saw because I was busy with Broadcom, and it's a pleasure to be busy with Broadcom. It's such a great company. But I was going through their numbers through the conference call, listen to the conference call, basically preparing for the live stream. Lulu got destroyed in the after hours, down 22%. Let's look at Lulu technically. So Lulu's going to open up maybe down close to $250 per share. Let's draw a fake red candle from 328. So back to 250. Look where support is with Lulu. It bounced there in August, bounced there again in basically tariff lows. So anywhere in the 240s. And again, this is just technically. The other thing is you've made a high here, lower high, lower high. So that's kind of ugly, but you should have support. Now, let's just say you wanted to take a chance on Lulu here at 230. You want a stop loss right underneath that. Okay, right underneath that. Great example of more recently why. This is just all technically I'm talking here. Look at United Health. United Health had a beautiful area of support. In fact, it was a 3-year area of support here at 430. At 430 was like a floor underneath a basketball. United Health would pull back to 430, bounce, pull back to 430, bounce, pull back to 430, bounce, pull back to 430, bounce. But look what happens when you break a key area of support. Okay, you go from 430 down to 250. Now we're back at 3. We're trying to consolidate at 3. So if I were to have bought United Health, I would have had a stop loss right underneath support. So that's what you just want to do with Lulu. If you buy Lulu, previous lows are down here at 225. I'd want to stop in that range, not much further under that. So you're going to risk 20, 30, 40 to actually 20 to the downside. That at the very least, you come back up here, make a new lower high at 314. So you could have, it's like $20 downside, $70 upside. The upside is, hey, this is just kind of a temporary, and we come back up here and retest 470 on this one. I would just say apparel stocks for the most part. You're going to have to give these ones time. Nike is the same way. Nike completely kind of like pulled out of trend. This is a back half of the year story, and a lot of things are going to have to go right for the stock to, the stock's not going to, it's not going to be terrible for the stock, but in order to regain trend, get back into the $100 range, a lot of stuff's going to obviously to go from 60 to 100 on this, a lot of stuff's going to have to go right. But these are the types of stocks that can be fun, on the edges of your portfolio, like the Nikes and these types of stocks. They can be on the edges of your portfolio. Lululemon, great company, but they have a lot of competition out there. I talk to a lot of people about fashion. Not that you can tell, but I follow the fashion industry as closely as I possibly can. And when I talk to people about Lulu, they say that they're missing the mark on color. They're missing the mark on the logo. The logo is not being as prominently placed on the garments. And they're like, why am I spending $120 pair of leggings if you can't have the logo on there? There's another brand called Aloe, which most people, when I'm talking to, people are coming into this brand versus Lulu. The great thing about fashion, guys, is the website and the models are, this is all part of the job. And it's such a tough job. When I watch the Louis Vuitton fashion shows, and that's brutal. So here we go. This is what I've heard in terms of competition, but Lulu's still a great company. Obviously they'll I would assume that they'll bounce back. Investing dad. That's right. Okay. If you have a certain chart, if you have like I'm on an algo scale, if you have, if you want to go to the hour or the minutely, if you're trading, I'm definitely not a trader. If you got trade setups that work for you, Fibonacci's, all that stuff, don't let me, please don't. You probably can educate me more on trading than I can, do that. Military background to pick defense stocks. Yeah, that's one thing I'm not. What is it? Lockheed. I don't even know how to spell these darn. LMT. That's right. I've owned LMT in the past because there's the trend. You can see I've had lines on here in the past. Actually has broken trend just a little bit, but still great. I like defense stocks. I just don't know enough about them to confidently speak on them. I would say like somebody that says they don't know in Wall Street, those are the guys I listen to the most. People that are like, I don't know. I'm like, okay, that's great that he can admit that he doesn't know something. What does he know? And with these defense stocks, you'll notice I don't think I really have. I have Palantir. Is it a traditional defense stock? Maybe not. I do look at this one, but obviously it's more for fun because the stock chart's unbelievable. Yeah, Karp was on CNBC this morning. I was listening to it in the car, and he was, he's a very interesting guy. But again, we've just made a new higher high. A pull off that is not a big deal. With Palantir, there's a beautiful level here at 64 and then 84. Those are the two areas where I'd be excited about that one for sure. Any thoughts on covered call stocks? I'm just gonna be honest with you. That's not a strategy. It's not my strategy. Not one of the reasons why I'm not like I do a little bit of trading in an account, but it's a very small amount. One of the reasons why is I'm in a high tax state. Not trying to use that as an excuse, but you can imagine if I rack up a bunch of realized gains, even offset by some losses, but for a full year, if I rack up a lot of realized gains in the stock market, it's not like running a business where I can run a business and then in October and November, I can say, wow, I've made a lot of money. Let me go buy this and do this and scale up my business the last 2 months of the year. So I don't have this big tax bill. You can't do that in California with unrealized, or realized gains in the stock market. So one of the reasons why I don't do a lot of shorter term stuff is because, California has really high taxes and I've paid them. In fact, I've got a letter from the IRS sitting on my desk. They're like, we didn't get your 2023 return. I've literally sent it to them like 4 times. So I don't know what's going on there, but I've already paid them. So it's not like we're fighting over money. They just want the return. I don't know. This one, a covered call, just not a strategy I'm used to, but this one just looks very similar to the Nvidia chart, just off the highs. Nvidia obviously off the highs. Looks like we're making a beeline, or we basically made a beeline to the highs. Now you're looking for a Broadcom situation with Nvidia. You're looking for a break above. We'd love to have a break above, even if it's just touching the 160s, and then a back test on this one. But you basically gone sideways with Nvidia. You're looking for pullbacks to 114 or lower to really get back into this one. I like defense companies too. The drones are interesting. There was an interesting note about Tesla where somebody was like, hey, the company can make drones. Not really sure if that's in their MO. The other really interesting thing that you had about defense was Meta partnering with Anduril, which they have a relationship with, obviously dating back to the founder of Anduril, which is like a drone maker, private company. He sold that guy, Palmer Luckey, sold that business sold Oculus, excuse me, to Meta. And so for a while there, Palmer Luckey and Mark Zuckerberg were kind of beefing, but now it appears they have a bromance, and I'll probably get to it here in a second, but bromances can clearly go off the rails. But Meta going to supply potentially some Oculus technology to the military industry. So interesting that you potentially could have that kind of crossover. That's right. Thank you for your service. Should have said that. Thank you, Investing Dad. I appreciate that. Carp was chirping. I know. Alex Carp is, I mean, I can see why you have, sorry, not just Alex. I can see why that you have these Palantir bros. If you speak, if you listen to this guy talk, you know, he's speaking a language that people can rally behind and kind of cult like, you know, rally behind. Meanwhile, he's selling the stock hand over fist. That's the funny thing is he gets on there and he talks the hell out of Palantir, and then in the background he's selling his shares about as fast as anybody. So that's right. Any comments on Nice? Heck is Nice. I don't know. $10 billion company. I don't know what it does in a downtrend though. So that's what I see. Technically, that's what I see. Lower. I know you had a big pop here in early 2024, but it sold off almost immediately back to like a new lower low. And so that's what I see. But you're in the middle. So that's that gives you a positive. You're in the middle. Here's what I would do, not knowing. Listen, I don't know anything fundamentally about this company, but I would take profits back to that even a little short of that. I would take profits because you're in a downtrend. So what you have to assume, the trend is going to continue. You're going to come up here to maybe 200 at most, come back down here, make a new lower low. That's the trend you're on. And you have to respect the trend. You have to respect the trend. Just like you could have respected the trend all along here. But then when it breaks, you have to respect that too. And it broke, you know, it's hard to say, but it really broke there. But, you know, and some could argue too, like that's the AVGO chart. You broke here, but you didn't get below these lows. I know these lows exist, but you didn't really get it below this area. That's why I think we're flattening out, but we'll see. Increasing demand. That's right. Lulu, I think maybe I'm repeating comments. I'm sorry. Reddit become the next Meta. Here's what I've heard about Reddit is the ROI on advertising is actually really strong. And so that's the way I look at these companies is less on the users, less on the buzz that it might get, you know, out there. It's all about the conversion of ad dollar. And what I've heard about Reddit, now I haven't tested it myself. I've run Meta ads. I've spent, you know, probably $1 million on Google ads, Meta ads, and I have spent $1 million. I've tested more recently some ads on X. They're okay. They're okay. It's not as good as Meta, it's cheaper, but not quite as good as Google. Google and Meta are the biggest for a reason. But what I've heard more recently is Reddit is very good on the targeted ad because obviously there's all these subreddits on there and you know what you're kind of like if you're trying to target weight loss or something. Well, clearly there's, you know, subreddits on there. Or if you're trying to target cryptocurrency or a stock picking service or whatever it is, it wouldn't be hard to go find your audience and advertise against it over there. That's what I've heard. I will be testing ads there at some point. And if that long-winded answer, if it's good for the advertiser, then it'll be good a stock. Okay. And this chart looks great though. I know we had this big kind of blow off, but again, these are, you know, early stage IPO companies. It's not an early stage company. Obviously they've been around a long time, but just early from a public perspective. Technically this looks great. Obviously it's hard to make a new higher high up here at 239. That's what you're looking for at some point. but you've got a path of no path of resistance back into the 120s on this one in the short term. That chart looks great. And like I said, I've heard a lot of, I study online advertising a lot, and I've heard really good things about Reddit, and I'm just waiting to be able to have, 5 hours on a weekend probably to go and dig into it and test it out. I don't even know if they have self-service over there where I can just log in and do it. I don't know if you have to go through an agency or what to advertise. So that's all stuff I got to figure out. And once I figure that out, then I'll have an opinion on the stock. It's a $20 billion company, but it's one here. Let's add it to the list too. Of course, my computer just completely slows down. We'll keep going here. Apple is in trouble. BlackBerry Vibes, great software or great hardware, stale software. Here's the deal with Apple is obviously we kind of showed their revenue is kind of stalling out. What I am concerned about a little bit with Apple is that this Epic Games, we'll talk about this tomorrow on the Fang Soccer Recap Show. Yeah, their earnings per share will take a hit. A court upholded that Epic Games injunction. So essentially what happened was Epic Games essentially won a ruling. This was like a 5-year court case. And it basically said that Epic Games, along with Netflix and Spotify and anybody that takes payments on Apple's App Store, they can offer an alternative. So as you have your iPhone up and you're about to check out, they're going to offer you a discount to go check out outside of the App Store. They're going to say, hey, if you click here, the price is going to be 30, but if you click over here, it's going to be 25. So Apple's going to have to make some changes. The initial hit will be to EPS, but I still believe they have a distribution advantage. It's not like Epic Games, can go and put they did go put their games elsewhere, but they are going to want their game on Apple's ecosystem. They're just going to want to control the payments. Apple, to remain competitive, are going to have to drastically reduce what they take. Right now, they're taking 30% on the high end. Epic can process these transactions for as low as probably 3 to 5%. Okay. Not every company is going to be able to do that, though. Okay. Now the Stripes, and there'll be other companies that kind of start up to handle that type of payment flow. But there's going to be a lot of app developers that just want to use Apple's ecosystem. They just don't want to pay 30%. And so Apple, I think if they're smart, they will cut the fees, which will cut EPS. But I believe there is a tailwind for Apple that is not being priced into the stock of having AI pay a fee to be the default on the phone. And so OpenAI or Google or XAI or one of these companies is going to want to pay tens of billions of dollars a year, just like Google pays the default to be the search engine. Somebody is going to want to pay to be the default AI of Apple. And I think if Apple is smart, they'll learn they're not as good actually developing the AI software, but they'll be very good at collecting a 20 to 30 to $50 billion check per year to let somebody else be the default of that. And so some of this EPS could get made up by that. Apple's got some headwinds, but here's the Apple chart, folks. And over the past 5 years, you've been at the bottom of the channel 4 or 5 times. And every single time, there's always been something bad happening at Apple. You know what I mean? So here you are. You got tariffs, you've got AI, you've got peaking, or plateauing sales of the hardware, China issues. There are a lot of issues right now. So if you let that make the decision for you, you become paralyzed. And if you learn anything from me, it's how you become unparalyzed as a stock investor. The way you unparalyze yourself is you let the price dictate what you do. Okay. If fundamentally you can get over everything at Apple and realize, like, look, fundamentally shit has happened over at this company. Okay. There's been a lot of bad things that have happened. If you can get over that, let price dictate where you buy. Also let price dictate risk management. Okay. You take some risk to have the trend continue. UNH, Talked about UNH. UNH is trying to find some support in this $300 level. Heavy volume at these $300 levels, as you could imagine. Here's my opinion on UNH, is that UNH dropped for a number of different reasons. The primary reason, or the biggest reason, I think, is the company misjudged Medicare Advantage members using more services than they thought. Medicare, this is my understanding, is Medicare Advantage premiums went up. And when it went up, the user was like, well, screw this. I'm going to go to the doctor now. I'm going to go get this test. I'm going to go get this lab test. I'm going to go do this. I'm going to use this. Okay. It's like a gym membership. And I've heard this analogy before. If a gym membership is $5 a month, you're probably not going to go. If the gym membership is $1,000 a month, your ass is going to be there every single day. Okay. Same thing with healthcare. Is if healthcare is cheap, you probably don't use it. If the price gets jacked up on you, you're probably going to use it. So here, long-winded explanation there. But UNH, technically, I would wait. I think you can wait here. But what are those Medicare Advantage members spending so much money on? What are they spending? What is UNH having to reach into their pocket and pay? Who are they paying? Okay, it's not just doctors, but there are a lot of companies in the healthcare space that are getting a lot more sales because Medicare Advantage members are using their plan more and more. That is the tailwind going forward. UNH are going to have to basically eat the fact that they mispriced Medicare Advantage. They're rebidding on that. I think the bidding actually is just confirmed. So you have to trust that they're going to bid correctly on this next year. And obviously the population is aging. I don't know. It's tough. Healthcare insurance business is tough. Then you've got political, and then there's all the other stuff with UNH, the investigations, the negative sentiment around the stock, obviously the tragic incident involving one of the executives. People clearly don't love this stock. So aside from all that, you're looking for a price. There was clear support right here. Previous highs were back in 2018, 250. So retest of that area would be my spot, and I'd have a stop loss just underneath that because I wouldn't want to see some more red candles show up. You don't got earnings for this one for 54 days. That's broadly across Wall Street. That's why these next 30 or 40 days are going to be almost nobody reports earnings. Oracle is next week. We might go live next week. Yeah, Lulu. I talked about Lulu, so you might, pop it up in the replay. I probably won't stick around for that much longer. I don't want to keep you guys for too long. Technically, you are pulling back to support. I would just say broadly too, apparel stocks, I wouldn't look at them to be immediate performers for you, but I do like the apparel sector. Okay. But you will have ups and downs. Okay. And there's a fair amount of competition coming for Lulu, particularly the brand Aloe is the one that I'm hearing. A lot of people are kind of moving to this brand. And I was in Palo Alto this last weekend and walking around a shopping mall. There was a lot of people in here. I stopped in the Lulu store as well. There was plenty of people in there, but this brand is hot. This brand is hot with people that want to spend like $300 on leggings or whatever they cost. Maybe they're only $100 or something. But I mean, those leggings right now, the crew neck is $118. The shorts that she has on are $70. So, the market's getting a little more crowded, I would say. UI? I don't know if I know anything about UI. User interface? I'm not sure about this company. Technically, it looks great. You just made a new higher high. This looks fantastic. Now, I know you had this big drop in April, but I don't say you can ignore that. I mean, you were on trend on this one and you broke and then you did back test. So I don't want to say it's this is not a perfect technical setup. You often break trend and then come back and do a back test. Okay. But you have clear areas of support on pullbacks back here to 317. It's the area I see. Oh, yeah, I own this stock. Oddly enough, Regeneron. Is this Regeneron? Yeah, Regeneron. I bought this one. I bought this one in like 2008 or 2009, like when it was 13. And then so it went all the way up here. I sold it somewhere when this downtrend started happening. You had high, lower, high, lower, high. I sold it in here. So for 382. I have very fond feelings about this one. It looks like to me, you've started somewhat of an uptrend. There's a clear support for this stock, though. Down. Well, first of all, where it's at, you have clear support, 470. Lower than that, you have a support for that one at 330. Haven't looked at it since I sold it, though. But I was in some pharma stocks. Not that I knew anything about them, but I had bought some pharmas after the great financial crisis. I piled into some pharma, and a lot of them did that. So the house I'm sitting in is courtesy of Regeneron and a handful of other ones. Yeah, okay. Like I just said, I don't know much about pharmaceutical stocks. I will say the ones that I know the most is Eli Lilly. And where's Eli Lilly on my chart? I can't even spell right now. Eli Lilly, also sitting on a bed of support. Very interesting. Novo Nordisk as well. Simply because of their weight loss business. Trend on that is really exciting. And I look at Merck, I look at some of the other ones, AbbVie, but I only look at the big ones. I mean, if you know pharma and you can pick the winners and losers there, you're going to make a ton of money. I'm just not that guy. John Blake, what's up, man? Loyal fan, loyal subscriber. Always love hearing from John. Happy Thursday to you, John. Great seeing you, my man. Given the relentless demand for hardware, I can see why Zuck made the deal with Constellation. Yeah. So I would say right now, there's obviously plenty of hype around nuclear, but they are going to raise a boatload of money at these prices. They'd be insane if they did not. $6.5 billion valuation. Oklo, I don't think, has any revenue. There was a couple of other ones that I was looking at. I can't remember their ticker symbol. The SMR is another one. New Scale, that's right. New Scale just broke to all-time highs, $8 billion valuation. I think they only have $14 million worth of revenue. This stock chart looks amazing. There's going to be continued hype around these stocks. If you want to buy the hype and play the hype, by all means, definitely not telling you not to do that. I would have some level of protection to the downside only because these stocks are going to raise money. Okay. Reminds me very similar of 3D stocks. I mean, there's marijuana stocks. There's like so many stocks you can compare this to, but look at, I remember the pump on these from 09. You went from $1 to 90 on this one. And now here you are round tripped all the way back to $1. This is going to be a lot of nuclear stocks. This will happen to a lot of quantum stocks. Now, in between the round trip back to $1, I mean, this is just unbelievable. Back down to the round trip. This is actually hitting on support here. This is not a recommendation to go buy 3D system, but you are literally sitting on 30-year support on this one. This is triple D. That's so funny. So yeah, you're sitting on 3 years of support here, guys. It just happened to go up to 90 and another trip to 50. Now here we are back at $1.50 on this one. $200 million market cap. A lot of the nuclear stocks and a lot of the quantum computing stocks will look exactly like this. They'll ride the hype, they'll bounce around, and then they'll round trip and come back down to earth. I would say with nuclear, it's obviously several years away. And I never say the word nuclear right. Everybody always criticizes me, but what I always tell people is my dad is from the East, my mom is from the West. And so I get this weird, I have this weird linguistic style and I'm also from Stockton, California, which is like one of the most ghetto places in the United States, let alone California. So I have my own style of saying things. They'll round trip. And so you've just got to I would just say, take profits. Now, one or two might turn into the next, big energy company, but politically that thing's tough too. Trump has got 3 years left, and who knows? I mean, who knows if he lasts 3 years with everything going on? Yeah. Thoughts on NIB, InBiz? Yeah, this looks great. You had resistance at 40 and you just kind of pierced up through it. All-time highs back up here at 70. The trend on this one is great. I don't love it at an $11 billion valuation, but I loved it a lot more at half the valuation, obviously. But this one's looking great. The trend's great. The story is great around this one. Okay. But again, with all of these, I would have some level of protection. Okay. Just understand with these small stocks, the odds of them becoming the Michael Jordan of the cloud computing business is basically zero. Okay. This is not going to overtake Amazon. It's not going to overtake Oracle. It's not going to overtake Microsoft. Okay. Will they capture the upside in the short term? Absolutely. Is it a great story? Yes. I would just say protect yourself to the downside, ride the wave to the upside. But clearly we love that one. Oh, and the newsletter, guys. Make sure you're subscribed, please. Shameless plug. This is a free newsletter. Please join us on Substack. EquityEmpire.club. Give it a moment to load. That is a redirect URL. So if it takes 5 seconds to redirect, my apologies. But yeah, hit up this is a free Substack. It will always be free. I post as much information as we possibly can over here. And this is where the reason why I brought that up is this is where the original recommendation where Nebulous came from was back in December. My internet, I'm on Starlink, so this is Elon Musk. Maybe Donald Trump is playing games with Starlink right now. But the original recommendation for Nebulous came back in December, I think. And we've done updates. We'll continue to post updates when the company reports earnings and those types of things. December 5th was our first kind of, first call, I guess, on Nebulous. And so this is the first time we talked about this. Also, I have confirmed with John is he will be continuing to cover small cap stocks for free on the Substack. So this is a great way to get idea generation. If you're into kind of small cap stocks, John's going to be writing them up, sharing the stories, because what you'll find is you go to MBiz has more coverage over on sites like Seeking Alpha, but back in December, nobody was talking about this company. In fact, I don't even know if the analyst doesn't go back very far on this one. This is all May. If you go back a ways on this one, this is when it was a different company. But there was not a lot of coverage on the stock back in December. In fact, there was just a handful of people kind of talking about it. Now it's every single day people are talking about it. And this is what you want with a small cap. You want to kind of find it before it kind of gets noticed. And then you have this over the last year, you're up 140, even the year to date, you're up 67%. So that's what you're hoping for. And John's going to cover that over on the Substack. So shameless plug. Join us over there. I think you'll enjoy it. I think you'll enjoy it quite a bit. I've kind of lost my place as it relates to the Nike. Yeah, I love Nike. Nike, you just got to be patient. I have people all the time. Oh, what's going on with Nike? They have a new CEO. Apparel business is in the shit. The trend did get broken, but this is not going to turn into Under Armour. This is not going to be Under Armour. There's Under Armour for you. Okay, what's this one at? Whew, that's ugly. Okay, so it's not going to turn into Under Armour. Okay, and everything that Nike is doing right now is correct. They're advertising correctly. They're creating stories. I'm seeing ads about Caitlin Clark. I'm seeing ads immediately. A team wins the Super Bowl, and they immediately have ads. Under John Donahue, they weren't doing that. Now, maybe they didn't have to because people are buying this stuff hand over fist, but it's a long-term game. Dick's just bought Foot Locker, and they have a great relationship with Dick's. They're getting back onto Amazon. They're getting back into placement. And then what you're going to find too is the competitors that have gained market share, the On, which is ON, a sneaker brand. And there's another one called Hoka. I'm going to say something that's kind of mildly controversial, but it is true. And I've been covering the fashion space for a very long time. In fact, when you look at Under Armour, if you go to my profile and you read some of my oldest stuff on Under Armour here, let me try to find my Under Armour analysis. And I think it was UA at the time. It was just a single stock ticker. This goes back like to some of my original analysts. It actually was UAA probably. My first article ever on Under Armour, if my darn computer would work. I swear, I think so. My first was back in 2016. So we're almost 10 years ago now on Under Armour. So I've been following the fashion space for a long time. At the time, Under Armour was a $40 stock. Okay, so $40 stock. Since then, Under Armour has gone down 83%, and the S&P 500 has gone up 173%. And this article destroys Under Armour. And you'll notice I have 243 comments. And if you go through and read these comments, it's basically everybody telling me I'm an idiot, I'm stupid, this, that, and the other. And I'm like, no, I'm right. Under Armour is going to lose. Okay. So I understand fashion. Believe it or not, I know it doesn't look like it, but I understand fashion and follow it very, very closely. Outside of semiconductors and tech, it's the industry I focus most on. If you walk around Palo Alto, when I was at CES, and again, I'm going to say something controversial here. Not everybody's going to like this. If just go look at the people wearing these sneakers. It's not a guy that looks like that. Okay. I know this is what they have on their website. They have black dudes wearing their stuff on the website. No, they're not wearing these shoes. You go, and I can say this respectively because I go to Stockton, I go to the ghetto every single week. I know what those guys are wearing. They're not wearing these shoes. The people wearing these shoes are not cool. Okay. They have a lot of money. They think they're cool. Their kids that are playing in $1,000 soccer camps are wearing these shoes. I am going to tell you that was exactly the same. Some of you don't remember this because you weren't around or you didn't follow the sector. The exact same true was Under Armour. This brand right here on is exactly the same as Under Armour. They were hot. Everybody thought they were cool wearing them, but the people that thought they were cool are not cool. Okay. That is what you have to understand with footwear and brands. And this brand will hit a wall at some point because what's going to happen is those people that think this brand is cool, another brand is going to, we're seeing this as I talked with Aloe. At one time, everybody thought Lululemon was amazing. Okay. And it still is still a great brand. Okay. I've got some Lululemon's clothes, but now all of those people are like, nope, I wear Aloe now. And I guarantee you, in 3 or 4 years, there'll be another athleisure brand that takes the business from Aloe. The same thing is true with On. They are hot right now, because white tech dudes or Asian tech dudes think this is what's cool. And they're wearing it because they think this is what's cool. But those guys don't decide what is cool. And that's what this is a 10-year-old article. That is what I'm telling you in this article is those people do not decide what is cool. People that are wealthy and are more or less nerds, which I say respectively because I am one too, they don't decide fashion. They don't decide what is cool. Okay. Something that almost nobody on Wall Street understands. And when I wrote this article 10 years ago, nobody in the comments understood it. And you look 10 years later, and this article predicted the demise of Under Armour to a T. Okay. And it's very easy to predict. So the same thing is going to happen to On. Hoka is even a worse example. I mean, this company's shoes are, maybe that's not their website, but Hoka is even worse. This brand is going to be nothing in a couple of years. My internet sucks today. Long-winded answer. But that's why I'm bullish on Nike. Because the people that decide what is actually cool wear Nike shoes, even to this day. Futures. Let's go check out futures. We'll get to the Trump stuff here in a minute. Yeah, futures are good. Futures okay. Any symbol E? I don't know anything about it. You guys are expanding my range here. They're all stocks that I have to look at. What is this? A $45 billion company? Oh, energy minerals. Not. Here's what I will say is over on Equity Empire, we are actively recruiting an energy mineral mining guy. And I know the guy. So I'm just trying to get him away from his current job. Hitting resistance here. You're looking for a break above. Rejection. Probably should be bought. Thoughts on TMO? What the hell's TMO? Oh, Thermo Fisher. Ooh. Ugly technically. You just broke through that level. There was another level there. You gotta hold here. Gotta hold 380 or about 400. You break 400 and God knows where this is coming. Could look like UNH. This looks like UNH. Clear resistance at 615. You sniff 615. I'm selling like quickly. Yeah, power companies are interesting. I have some that we recommended over on the premium side, and it's a unique take. I wrote about it on the newsletter. I talked about how you have this natural gas thing happening, and natural gas. What I will say is natural gas is really interesting because nuclear is years away. But natural gas is immediate. And as we learned anything from Broadcom is that the demand is insatiable. People are doubling down. There's urgent demand. Even Meta's deal with Constellation, that is not going to fire up it for like 2 years if it's on time. Natural gas, you can fire this thing up, depending on what state you're in, but primarily Texas. You can get this fired up in like weeks. So that's exciting. AMD broke out technically. I did write a newsletter about this. I keep shamelessly plugging the newsletter. But I did wrote about AMD's broke out technically. So technically you will see AMD. I'll show it to you. Let's zoom in. We were in this very steep downtrend. This is a very ugly downtrend, but we just broken out. Now we're consolidating in this 115 area. That is A1 perfect. You love to see it. I believe now technically we are in that trend with AMD. So here's the middle of the channel, probably about right here. You're walking your way back up to the middle of the channel. Looks beautiful. Higher high would take you back to the 250s. I would take profits as you moved up this channel. Looks beautifully technically. Fundamentally, they missed their release window with the high-end GPUs. They needed to ship this quarter to compete with Nvidia. They missed that. They are not coming until the fourth quarter. This is the next generation of the MI 300 that's on the market right now is competitive with Hopper, and now Nvidia is basically not even selling Hopper anymore. So they can't even compete with Hopper. Okay. And so the pricing is just not going to be there. In fact, Amazon today, I think said they were basically slashing price on Hopper rentals. Yeah. Slashing prices for Nvidia GPU instances. This is going to be Hopper. So Hopper pricing, here's how it works is obviously Amazon or any hyperscaler that rents out their GPUs, they buy the GPUs and then they rent them out. And obviously the higher the price, the more they're willing to pay AMD. Right now, the pricing on Hopper is in the tank. That is because everybody wants access to Blackwell. So that means if you have a chip like AMD that's only competitive with Hopper, it means Amazon can't rent that out for a very high price. That is because they are slashing the prices on Nvidia GPU, which is Hopper. So it's not good for AMD. Fundamentally, it's not good. Technically, though, it paints a different story. But I would take profits on this one. It's not one of my 4 holdings. I have some AMD shares, but I wouldn't consider it a core holding. Thoughts on Google? How long do you have? I like Google. Google technically looks great. There's Google. Actually, I tend to look at the GOOGL. Technically looks great. Still in how long has this uptrend been intact? Since 2008, really since the beginning of time. So this one looks great. Looking for a higher high up at 210. Pullbacks. Google looks great. I'm not really concerned about that one. Ladies love aloe. Yes, they do. That is that is a fact. You can come to the aloe, and I've been on worse investing, research and development and due diligence. It's very difficult to do due diligence on these fashion brands where these women, the pictures are nice. I mean, I would just say fashion wise, this is high. I can see why they can charge. This looks like to me more than $128. I think you're getting pretty good value on this. So, and then it's just another competitor in the marketplace. It's tough. Tesla. Yeah, let's get to it. John, thank you for keeping me on track. So we have Elon Musk and the president going at it. Some people saying this is staged. I don't think it's staged. What I will say is I think the president has slightly more people around him. In 2016, he would have gone full on ballistic on Elon Musk. Now, he said some things on True Social, which I don't have up here, but he has said some things on True Social. He will probably say some things in the media. But I know to some of you, this might come as a surprise. The president has dialed it back a little bit. He's getting older. I think that's part of it. But he also has a chief of staff who keeps him dialed in a little bit. I mean, obviously a little bit with Trump. He's still a loose cannon. Elon Musk is very much a loose cannon as well. I believe Elon Musk is upset that the $7,500 tax, just in case you didn't know, if you go to the Tesla website and you're trying to buy a car, it used to be a tax credit. So you would buy one of these electric vehicles, and then what you would do is when you would do your taxes, you could take a federal tax credit. So this only applied to people that quote unquote pay taxes, which is actually it's not a huge number of people in the United States. Now, what they are doing is they are giving you the $7,500 in cash right away. So the price that you see here includes a $7,500 tax credit. So when Tesla sells this car right here, they will get the money from you or the financing company or whatever. But they also get $7,500 from the American taxpayer. $7,500 from the taxpayer for somebody to buy this is like a $40,000 car. Trust me, I live in California. Every third car that you see is a Tesla. Okay. Nobody broke is buying these cars. So should we as a country be giving $7,500 to buy essentially a luxury car? I don't care what car, a $40,000 car, depending on who you ask, but among friends, it's not a luxury car, but this Cybertruck is this is like damn near $100,000 car. The Model X and the Model Y or the Model S, those are like $100,000 cars. And we're giving people that don't need a $7,500 tax credit, we're giving that to them. Now, to President Trump's credit, that wasn't his idea. That was the previous administration. Now, it's great if you want to buy a Tesla. Okay, as this credit phases out, I will probably trade in the Teslas I have and buy a new one to take advantage of the discount. But those are going to get rolled back. There's other things inside of the quote big beautiful bill that Elon Musk is taking offense to, but I really think he's taking offense primarily to the fact that his business relies on these $7,500 tax credits. The cars aren't selling very well now. Imagine if they were $7,500 more. And as we know, if we dived into Tesla's gross margins, which I won't pull in right now, but the vehicle gross margins are in the tank. They can't eat $7,500 per vehicle. So if the demand sucks right now for Teslas, strip away that. They're giving 0% APR right now. So they're eating it on the APR side too, because this is subsidized. Because there's nobody, like what bank is getting money less than this? So they're literally subsidizing that. So I think he's more or less upset about that than anything. And he dropped the E-bomb. I'm not going to say it here on YouTube because I don't know how they feel about saying that word. We might get kicked off or something if we start dropping the E-bomb. But he basically said Donald Trump is in the E-bomb files. Have a nice day, DJT. Mark this post for the future. The truth will come out. Whew. So he went there. He went there. He also went to the Trump tariffs will cause a recession in the second half of the year. What's so funny is a lot of people will latch on to Elon, especially Donald Trump haters will say, oh, look what Elon Musk said. Second half of the year, the recession is coming. Those same people will criticize Elon Musk saying that the Cybertruck was going to be 50,000 and now it's 70,000. Those same people will criticize Elon Musk saying, oh, robo-taxis would be here in 2024. And now here we are in 2026. So take every timeline, obviously, that Elon Musk gives you with a grain of salt. Also, the definition of a recession is a fluid situation. Also, will a recession not be priced into stocks by then? That's the other thing that you have to factor in. If it's believed a recession is coming, could you potentially see that already priced into stocks? That could potentially be true. I'm also going to be sending out a newsletter. This will be on the premium side, but I believe inflation expectations are too high. If you look at rents, you look at prices around a lot of goods, there's no upward pricing pressure. You look at what McDonald's and Chipotle are saying on conference call, nobody can raise prices right now. So I think inflation expectations are way too high, even with these tariffs. And I think unemployment is getting worse. We'll see those numbers. We're already seeing the numbers. They're not looking good. The Fed is going to be cutting rates. And I think more aggressively than what's being led on. And so there's your kind of recession. Yeah, we might have a recession, but then the rates get dropped down back to 2% and a lot of things get solved. The voice of reason is Mr. Kanye West. He's saying, bros, please, no, we love you both so much. Someone saying Kanye being the voice of reason was not on the bingo card. So we have Elon Musk and the president battling it out. The E-bomb being dropped. Tesla stock getting absolutely hammered today, which I think is, I actually don't think that sometimes you see these stocks get hammered. It's up a little bit in the after hours. Sometimes you see these stocks get hammered and you're like, that doesn't make sense. I do think this is not, I would say this is both good and bad for Elon Musk and the stock. What's bad for the stock is the fact that these EV credits are pretty much gone. I don't think Donald Trump's going to be in any mood to leave these in, unless he wants to work things out with Elon Musk. That's possible. These will get stripped away. Everybody understands that the demand for Tesla vehicles is in the tank. You strip away you strip that away and it's not good. So technically it probably did the right thing, but look, here's the stock. Technically, you've been making a series of higher highs, higher lows. And what I always say on the Fang Stock Recap Show is this is not a stock for everybody because you have these big swings. In December of 2022, it was 105. It like 6 months later, it was at 297. So you tripled in 6 months. And then about a year from there, you basically got cut in half. And then you went from 140 all the way up to 480. And everybody's thinking they're a genius. And then you came all the way back down. So this one, obviously, if you can't stomach the ups and downs, and a lot of people can't, this is not a stock for you. This is not a stock for you. But I bought my shares somewhere back in here. I remember having a conversation. I teach finance at a middle school. And I remember having a conversation with a kid. And he was like, I really love Tesla stock. And I hadn't really considered Tesla stock. This was back in like 2015, 2016. And I was like, I don't know. I've never really considered it. But this kid was so passionate about it. And I was like, cool, I'm going to show you how to buy Tesla stock. Because this is one of the things I showed the kids. So I had a Robinhood account, still do at that time. And so I bought shares of Tesla in this window and I accumulated in this sideways consolidation. And so my opinion of this stock is very much skewed because yes, the stock is chopped around, but my cost average on this one is like $20. So I'm not, it's like, who cares if you go down, up or down, you're up still so much. And I think, you have a lot of tailwinds with this stock, the robo-taxis. I don't think the robo-taxis are going to bring in a lot of revenue in the short term. I mean, they're talking about launching with 10 cars. We're talking about $1 trillion company here, now south of $1 trillion, but you're talking about $1 trillion company, basically, you're not moving the needle with 10 cars in Austin, Texas. Okay. They're going to have to scale that up, but I think they will. And they'll scale up the Optimus robots. They have a lead there. And I think they'll be a leading humanoid robot company. And, that business combined, the car business is whatever. People are right. The company is completely overvalued if you value it just on the car business. The car business is not that exciting. But what did I tell you about, what is a car? A car is just a robot on wheels. And if they can turn these into humanoid robots, turn these into robo-taxis, that's an interesting business. There's less competition there, and it's interesting. But if Tesla stock goes to zero, I have people tell me all the time, oh, Tesla sucks. It's good. You're stupid for buying it. Guys, my kids are still going to eat. I'm still going to live a great lifestyle if the stock goes like this. And that goes the case with every stock that I have. Okay. It's because I've bought these stocks. I've sold them in the past, bought my house. Expenses are low. Things are paid for. The portfolio could go to zero and we're still doing great. Yeah. Oklo has not made any profits. Fleer. Yeah. I'm doing my best. What was it? Don West, my man. Bye. I've got a mix of sports card people, and I have strong opinions on the sports card business as well. Colin, just say, if blacks don't wear it, it ain't cool. That's basically it. Thank you for saying that. That's basically going back. Yeah, ons are LVMH. I love Louis Vuitton. Again, but the LVMH, I don't know if they'll show it to me. Yeah, they'll show me this one. Bet of support. Decision day for LVMH, guys. You don't want to see it break in here at 5:30. Don't want it break there. Break there, you're coming back down to the 300s. But strong brand, and it's not just Louis Vuitton and Hennessy. It's like Tiffany. It's like a million brands. But I like this stock. Every time I buy Louis Vuitton, I buy a share of this, and so at this point, it's a decent holding for me. Hoka's might be great for running, but it's just not, they're not cool. A QXO to the upside? I hope so. I just bought more of this. No, that's wrong. No, that's right. Sorry, you have to go. The stock is it's so funny. I recommended QXO, I think it was here. I don't know where is this right? Yeah, this is the right chart. I can't remember where I recommended QXO. But what's so funny is I get criticism for this one, but it literally went from 20 to 200, and then people didn't sell. And so, and then it round tripped to 20. And my message to all of those people is always if you give me a stock tip that goes from 20 to 200, I am buying you dinner. I don't care if it goes to zero a week later. Please, God, people give me the stock picks of 20 to 200 in weeks. Let's switch this to a daily chart. Yeah, it looks okay. You did kind of break this area right here. I'm in this one at I don't know, 12 or 13 in this consolidation. There's support underneath this. Still holding this. This is a long term. I don't even look at this stock. I think it'll become a $50 billion revenue company. Current market cap is 10. You have to factor in there'll be a fair amount of dilution to get to 50 billion. So it's not like you're going to 5x from here, but I think you could comfortably 2 or 3x on this one over the next couple of years. I like that one. I did. Yeah, Scoops, we did talk about Nebulous. Also on the newsletter, we'll constantly give you updates about that one as well. So just, stay tuned to the Equity Empire newsletter. Nebulous looks good. I mean, technically it's a little stretched, but it looks good. Looks good. Resistance here. If you get to highs, maybe take some profits. Probably be a good idea. Love Google. Robinhood. Love the product. I don't have all my money there, but technically that looks fantastic. Just confirmed a new higher high. You're looking for pullbacks either back to 65 or slightly lower than that. But you just made a new higher high. Technically, Robinhood looks absolutely fantastic. Kinder Morgan. I don't know that one fundamentally. I get asked about this one a lot, so I should add it to the list. $62 billion company. You're up against resistance. So you're looking for a break at this level, but it's going to be hard. Pullbacks in that one should be bought because I actually think, I mean, it's a mixed bag technically, but you're in that beautiful uptrend right there. A break just above this level could be bought too, because then you're maybe retesting this area. The scale's like really tight though. This is like 28 to 30, so that's only like $2. Looks good. Looks okay. Yeah, AMD computers are really nice. I would say probably the go-to for sure. If you're, I'm on a Mac, but like anything, if I was PC, I would definitely get an AMD one. Maybe Qualcomm. Qualcomm makes some nice one. AOC saying the girls are fighting, aren't they? Yeah. AOC, she doesn't offend me. You know what I mean? Like you'd think like I'd hate this girl. She doesn't offend me. Like, would I agree with her on a lot of policy and a lot of like how to do things? Probably not. But she doesn't offend me. She doesn't anger me. It's not like, it's like Trump doesn't anger me. She doesn't anger me. Bernie Sanders doesn't anger me. Some politicians I don't like, even like Gavin Newsom. I could say like 90 million negative things that Gavin Newsom has done negative to the state of California. But does he like negatively make me feel angry? No. Not that that's what the comment was saying, but I often get asked about like Democrats like this, and it's like, they don't anger me. They don't anger me. And this is what I think makes me a decent investor. Like, imagine if she became president in a couple of years. I don't even know if she's old enough to become president, but imagine if she did. We would be looking for opportunities she'll be able to capitalize. Okay. Because I promise you, I like making money more than I like, yeah, I said a lot of offensive things. So don't tune into this is one reason why I don't do a lot of fashion videos. You have to talk about race. You have to talk about race when you're talking about fashion. And that's what I did on Seeking Alpha. I remember this article talked a lot about actually race. And race here, it says the race Under Armour will lose. Some people think that's the race, like the running race, but it was actually a play on words. This is talking about like ethnicity. And my argument was Under Armour is never going to get the quote inner city to wear its stuff. That ended up being true. Okay. Same is true for a lot of these other brands. Maybe not Aloe, but for these, I took off the on brand, but you have to understand, you have to be able to talk about race and gender. And in today's society, I would say it's gotten a little easier, but for a couple years there, you couldn't talk about this stuff without being labeled as like a racist or an extremist or insensitive or whatever. But if you want to invest in these companies, you have to do that. You have to look at it critically. Most people can't do that, which is again why I don't I don't talk about them much. Solar stocks, I mean, at some point these will be fine. Let's bring up like Enphase. Oh, I mean, you're in that right there. So you wait for a breakout. You wait for a breakout is what you wait for. That's what you wait for. I mean, here's how I always describe this. Imagine this is like a condo. Imagine if you're trying to, this is for Keegan. He's asking about solar stocks. Here's how you know when to buy is just assume this price right here, this downtrend right here. Assume this is the price of condos in a building that you're looking to invest in. So you're trying to invest in some condo buildings, and they're all the same. They're all 2 bedrooms, the same carpet, the same, and they're all the same. There's nothing different. The view is the same. Everything's the same. And imagine this is the price chart of those condos. And you're like, I'm wondering when I should buy these condos for an investment. And every month you look and the price just goes down. Now, every once in a while, the prices stabilize for a little bit, but then they go down and down and down and down. How do you know when you're going to buy one of those condos? When people start paying higher prices than the previous months. And they do it. This is a daily chart. You probably want to put this like on a monthly chart. It'll get you a better indication. Like nobody has paid a higher price for this stock, or in this case, condos, for a very long time. There was a brief period here in 2023, but this is also why you put the trend lines in, because it was just a technical bounce back up to the top and then boom, all the way back down. So a technical bounce with end phase would make a higher high over the April highs, but it could just be a resumption of trend where you're going to hit there, hit resistance, and come back and make a new lower price. What you're looking for is an extended push. With end phase, you're looking for a put, and this is shocking. And this is why a lot of people lose money buying the dip. Is you've got to wait for this one to push back into 100. And I know from 40 to 100 seems ridiculous to wait that long, but you have to wait, because here's what's going to happen. You're going to come into 100, and this is going to be hard resistance here. I mean, we could slap on this fixed range volume profile. I'm pretty sure what it's going to indicate is heavy. Look at where everybody bought. Okay. So that will be a magnet to price. I'll zoom in on that so you guys can see this. Everybody bought end phase at 100. Okay. They thought this was the bottom. We're going to buy. Well, no, it went to 40. Okay. So that is going to be a magnet back to the upside, but it's going to be very hard to churn through this, because think how you feel if you bought end phase and you've seen Nvidia 10x since here, every stock base, Palantir, SoFi, all the high flyers have 10x from this, not 10x, but you get the idea, have skyrocketed from the 2023 timeframe. So they're going to get back to even, and they're going to sell. That's going to create a back test opportunity. You're going to want to buy the back test, okay, which will probably take you back in the 50s and 60s. Again, this is assuming that you break out here. I'm just not convinced that you'll do that. The solar subsidies are being pulled off. Even out here in California, they changed like the net metering. I have solar in my house, so I know this. They changed the net metering to where when I'm producing excess solar, I get like nothing, basically. Like in the past, my bill would be negative. Like if I wasn't running my AC or wasn't charging the cars or whatever, I would get my bill would be like negative $50 or whatever from the company, from the electric company. They changed the law out here in California. Now you get nothing. So it changed the ROI. Now I have electric cars. So even when I'm running my AC, I don't have a big house. I have a very modest house in a nice neighborhood, but it's a modest house. I run my AC, I charge my cars, my bill's like $100. Whereas I have friends that are like, my electricity bill's like $700. I'm like, you're crazy. You should have bought solar. So solar is a great value, but and my guess is you gave some other, FSLR. I mean, this one's not as bad. End phase just fucking sucks. This one's not as bad. You just confirm a new higher high. So I would say it's stock specific. This one doesn't look too bad. Retesting these areas at 116 or even a little lower than that could be a buy. So you're gonna have to figure out which one you like the best. Ugh, this is Sunrun. Ugh, that's nasty. Like if you pull up a chart and it looks like that, you don't want a Sunrun, you want to run. that is ugly. And I just described what you're waiting for. You're waiting for a break above these highs. So with Sunrun, you're looking to go from 8 to 25, and then you pull back to trend back to 12. You would buy it at 12. And when you buy it at 12, you need to stop, like at 10 maybe, or even higher, 11, because you don't want to get sucked back into a trend. I've seen that happen quite a bit of times. So that's how you set those up. Cal Ripken rookies way up in value. Maybe, yeah. I got a bunch of Michael Jordan cards. Kobe. Are you convinced Tesla doesn't need LiDAR? So I'm not convinced of that, but I'm convinced in most driving scenarios in major metro markets, not necessarily like New York City, which I know gets some really kind of bad weather, if you will, during the winter. Out here in California, full self-driving with just the cameras should be enough for most cases. Now, it's not to say that Tesla won't have problems here. It's gotten better. Full self-driving, when I've been using it for a while now, it has gotten so much better. Okay. That I have minimal interactions and interruptions. Now, when it interrupts, you're like, fuck, and as a father, you're like, I would not want my kids, they're usually in the back seat with me. But I wouldn't want to be back there with them when it malfunctions. Okay. Full self-driving with cameras is safer than human driving, though. Safer than human driving. Will they need LiDAR? They could comfortably bolt that on. If they need more sensors on the car, that is an overcomable thing. I was at the Consumer Electronics Show in January. There are companies creating bolt-on systems. They're in prototype phase, but there was 3 or 4 booths where they literally had a Tesla with a bolt-on camera system on the top. So it looked much more like a Waymo. So it was utilizing Tesla's camera system, and then they put on more of a camera system. Tesla could comfortably, if Elon Musk wants to eat his pride, which I don't know if he does. I mean, this man is, I mean, he don't give a fuck. Obviously. Tesla could retrofit the cars, and it wouldn't be complicated. It would like be a bolt-on thing, or even a magnet or a suction cup on thing to the glass on the top. I'm certainly no expert here, but I would say under most driving conditions, I think Tesla full self-driving will work. In bad weather and edge cases, obviously things will happen. But with a human driving, I know there was a story going around with it was like a 2 or 3 year old story about there was the sun glare. Okay. I've driven in sun glare. It is not easy as a human. Okay. Same thing. I've driven in very heavy snow. I've driven in very heavy rain. In fact, I drove in very heavy rain with a Tesla, and I thanked God I had full self-driving at the time, because I could not see anything. And the car literally got me through. It was actually over the Grapevine in Los Angeles. Those of you know that made that drive. It was pouring rain. And the car got me over, no interruption at all. Now I was doing 50 the whole time. So I was in the slow lane I literally was in the slow lane with the hazard lights on, and the car made it over the Grapevine. No interruption, no safety concerns at all. And I was sitting there scared out of my mind. And so it works, and it works better than a human. There will be problems. How much problems? Obviously, we'll see. Dude, if you sold silver coins on props, I bought a lot of silver. Maybe I shouldn't say this, but I have silver coins. I have a lot of them. And this is great. Kind of makes me want to sell them. I was buying a lot of silver when it was, let's actually pull this up on the technical chart. I was buying a lot of silver when it was 15, as I recall. This was a while back. Yeah, I was in this consolidation area here. So you have this big drop, and then there was this consolidation area of, it was like 17, 18. I was buying a fair amount of silver here. And yeah, it's been good. I'm going to keep them. I'm not going to sell them. But I wouldn't blame anybody if you want to sell silver here. Go ahead, take your profits. You're the man. You're the man. If you bought silver and you pop, I actually have a coin website. I don't know if I want to give it out. Maybe I will. This is my website here, and I price coins. I don't work on this, so don't think that I'm actively working on this site. This is all work done in the past. But this is like I think it's like a 15-year-old site. And if I told you how much money it made, you would be shocked. It does well. Yeah, I tell you what, when it comes to robotics, he's saying, hey, I'm surprised that there's some stocks that I'm surprised not in there. I still think it's a little early with robotics. Still a little early. Not that if you want to invest in Deere, I'm not going to, trust me, I will recommend Deere. Here's Deere stock. I will recommend it when the price is a little better. We just hit all-time highs on this. So I tend not to recommend stocks when they're all-time highs, only because as we see, they pull back. Intuitive Surgical, I'm going to put this one on my list too. This is one I've looked at, and I think you bring up a really good point here. So I'm going to put that one in there too. All-time high though. For me, waiting for pullbacks. CoreWeave. CRWV. Yeah, CoreWeave. Yeah, on a monthly chart, it looks great. Well, any chart looks great. You're waiting for pullbacks on this one. Obviously. I like other companies in this space. But if you like speculative stuff, it's fantastic. Are you shorting any of the quantum stocks? No, I don't tend to short stocks. Only because, number one, the account size required to short stocks tends to go over what I'm comfortable with. And yeah, I could see shorting it here. You do have resistance here. But if you have I won't say it. If you have the cojones to short these stuff, I don't have the cojones to short this hype stuff, because there's so much stuff that I would have shorted over the years and I would have gotten destroyed. There's just so much hype around this, but these companies need to raise money at these valuations. $1.67 billion. They should be raising like $500 million. Obviously, if they did that, the stock would go to like 5, but they should be raising money. It's scary for me. I like stock, as you guys know, I like stocks that are buying back tens of billions of dollars of stock. I don't want to invest in stocks that are diluting themselves. Now, that again is not to say that you should avoid that, because look at like InBiz raised $1 billion this week. I would just say I'm not the expert. Like, we got to have John on. We'll bring John on a live stream at some point. Like, he's the one to talk about these stocks that are diluting. Like, I just can't. It's hard for me to buy these stocks that are diluting. Now, I do own some NBIS, but it's not like, I mean, it's like every one of my stocks. If this goes to zero, I'm not going to cry. But you know, to give you some context, my Nvidia position, Broadcom, all the FANG stocks, Oracle, way more. I mean, we're talking exponentially more into those. Yeah, here's a good point by Pennywise: is quantum. You have some small players right now, but in 10 years, if quantum is a thing, the only ones that are be printing money will be Google, Nvidia. I mean, they'll let it maybe buying some of these companies, but they're gonna benefit. You know what I mean? Yeah, Microsoft's kind of big on it. Axon, I don't know much about Axon. I just don't. I don't know much about this company. Just hit all-time highs. I'd be happy if we were into that one. So Max, I would say you've just hit to all-time highs. Back test to 673-ish if you wanted for whatever reason to buy more. But this chart is you're playing, here's my term, is you're playing golf on this chart. Okay. You're just forgetting about this one. You don't want to break these lows, but they are way down here. You don't want to break 470. Maybe even in the shorter term, you probably don't want to break maybe 520, but obviously that's a long ways away. So, but expect a pullback in this one. But if you want to lock in your profits, stop losses at 705, a stop at 638, breaking those levels obviously increase the opportunity back here at 550. But if I were to buy this one, if I was sight unseen, I don't know anything really about this company. Sight unseen, I wouldn't buy it till it got back in the shorter term, back to the 570s. That's what I would. Yes. Okay. So they do drones are hot, and maybe delivery drones become like really, really big. Thoughts on semiconductor ETF versus actually buying it? Yeah, you can do this. No problem with that. If you don't want to pick winners and losers in the semiconductor business, honestly, I believe the SMH too, like basically just concentrates you into the stocks that I like, which is TSM, ASML, Broadcom, Nvidia. I mean, that's basically this ETF right here. I mean, this chart looks like Nvidia, basically. Like, look at that chart, and then I'll pull up Nvidia. I mean, it's the same chart, basically. So this is SMH. I like the SMH a little bit more, only because it is concentrated, in my opinion, in the higher quality ones. And so I like this one. You want it to break above the level it's at 260 and make a new higher high at 280. You would like that. You don't want it to break this level at 230. You break the level. I mean, it's not over concern if it breaks 230. You're just seeing lower levels. It's a really good buy south of 200. That's how I would do that. But if you want to invest in ETFs, by all means, I know I talk almost exclusively about individual stocks. The other way to do it is like, you can say like which ETF, or there's like, I think ETF.com or something, or ETF. Yeah. ETFDB. Maybe it's that one. No, I don't think it's that one. ETF.com. Maybe. That's a great domain name. Wish I had that one. Maybe it's not this. I don't know. There's an ETF site where if you wanted to find out like who has the biggest exposure, like if you want to buy Apple stock, but you don't want to buy Apple stock exclusively, there's a site out there that shows you like which ETFs have the highest amount of exposure to Apple. And I think it's these. Yeah. So it's this allocation. So you have these 2x longs. You can ignore those because that's basically not, if you want to trade Apple, you're going to want to likely trade it with these 2x long ETFs. So instead of trading the underlying of Apple, you're going to want to trade the ETF. These are all really, this is all like really, really new. I'm sorry, that's app. No, that is Apple. Okay. I don't know if this is right, but maybe it's this one, APPBB. But these are either long or short Apple on a 2x leverage. So if you're going to trade the underlying, you might as well trade the leverage product. Just understand leverage products, know what you're getting into. It's for more day trading rather than I'm going to like swing trade Apple. You can swing trade these, but it's not a great idea. But what you can do is see where Apple has a huge allocation. So if you want exposure to Apple, but you want exposure to an ETF, find the ones that have the highest allocation. Just also keep in mind when you dig, go ahead and dig into these, make sure the expense ratio is not crazy. On a Fidelity one or an iShare one, my guess is it's probably not that bad, but just understand you got Vanguard in here as well. And so that's how I would, if you want exposure to an individual name through an ETF, this is how I do it. Not all the time that I do it this way, but particularly sectors where I'm less, I'm less familiar with it. Guys, I appreciate you guys all watching. We'll probably wrap it up here in about 5 to 10 minutes. I really appreciate it. Thank you. Yeah, first of all, thank you for the questions. Thank you, Keegan. Thank you, everybody, for tuning in. SB, what do I think about Amazon? I love Amazon. In fact, I tweeted something about Amazon today. What did I tweet out about Amazon today? There was a lot happening on Twitter today. My God, there was a lot happening. Let's see. Where's my tweet? Oh, yeah, I had this long thread today, so we got to go down a little bit. Amazon is developing software for humanoid robots that could eventually take the job of delivery workers. They're completing construction of a humanoid park where they are going to have these robots get out of the trucks and deliver the package. This is why I continue to be bullish on Amazon, is because they have some of the highest revenue. And so they have high revenue, and a lot of that revenue gets chewed up by human labor. And so, my gosh, you can, create a lot of value at Amazon if you're able to replace some of that human labor with robots. And so the gross margins and the net operating margins over at Amazon, instead of having 2 million employees, what happens if you only need 1 million? Well, the stock probably is going to be worth a lot. And I stand by my call that I made a few years ago that has not come true. At the time, Apple was the most valuable company, and my call was Amazon would become the most valuable company. It has not done that yet, but I do believe we're probably not long from Amazon being the most valuable company over Apple. Now, will it be worth more than Nvidia or Microsoft? Different conversation. Technically, it looks fantastic. You're making higher highs. You're making higher lows. There's clear air. I have this green box. Anytime you see a green box on my chart, you were buying shares in the green box. If you had bought shares in the green box, you will have made money for the most part. We had a big drop here. That was a great buying opportunity as well. But it looks like to me, you want to walk your way up to an all-time high on this one, back into the 240s. I'm biased with Amazon, like the company. You don't got earnings for 56 days. Halliburton with the game-winning shot. I used to watch a lot of sports, but don't watch a lot now. I'll watch football. But hey, if you're a Pacers fan, I'm really happy. I'm a Lakers fan, so we've won a fair amount. So when another team wins, I'm actually very happy for their fan bases, because as a Cincinnati Bengals football fan, I know what it's like to not win. Intel, yes, very bullish. Chart's not like perfect, but boy, you've got huge consolidation here. Now, this is speculative. I'm bullish on Intel in a speculative way. Okay. So I'm not trying to categorize everything that I say, but I think you can tell. Like when I'm bullish about a company like Amazon, like I'll tell you, I think it's going to be the most valuable company in the world. So that's my bullish call. There's nothing speculative about that. Now, whether it comes true or not is another thing. But with Intel, speculative. This and Boeing are like the same story. Boeing is like the same thing. Boeing was also a call on our newsletter. Let me make sure you're subscribed to the newsletter, because Boeing was a call in our archive. Can't remember when it was. It was like last year in December or whatever. I said, hey, I like Boeing. Then I did a video, and then it went out to premium subscribers. All at around the same price, like 170 or whatever. Right at 170, there was some clear like kind of demand for the shares. And I was like, I really like, maybe it was 140. I can't remember. It was either 140 or 170. I can't remember. But I really liked this stock. We've just broken out of the downtrend. You would like to see this one push back into the 265s. Whether that happens, I don't know. You do have a long-term trend that, surprisingly enough, is continuing to hold. But Boeing and Intel remind me very much of each other. And from a speculative standpoint, I like them both. I have more into Boeing than Intel, only because Boeing has a $500 billion backlog. There's not many companies with a $500 billion backlog with a $157 billion valuation. So if Boeing can actually deliver the freaking planes, this could triple. Okay. Triple. Easy. They got to deliver the planes though. Thoughts on Datadog and Snowflake? I saw that Dog did, is it Dog or is it DDG or something? Gosh. No, that's not it. Datadog. I don't know. I don't look at Datadog much. Snowflake is on my radar. I'll just say that. Looks okay. You know, the areas, obviously. I mean, oh, yeah, the area to buy was down here. But on a pullback, you're hitting resistance here. Resistance with Snowflake at 210. If you break above that, for me, I'll have just missed that. And then I'm looking for, so you've created, here's what you're looking for. You've created a low, a higher low. So that's potentially the start of a trend. You've made, you could call this a high, higher high, higher high. Looks like to me, you're going to want to get into that trend right there. Now, you could just keep blasting up. That's possible. If you get rejected here, you're looking for areas down here, south of 175. That's what I'm looking at. Oh, yeah. DDOG. That's right. Thought it was 2 Gs. Datadog. Oh, you can tell I've looked at this one in the past. Here's a great example. Something we've talked about a lot. Stock was in a major downtrend. Look at the major downtrend you were in with Datadog. And there were people that bought the dip here. There were people that bought the dip here. There were people that bought the dip here. People that bought the dip here. In some cases, you might not have been wrong to do that. But how do you know for sure is look at the breakout. You finally broke out. And then what did you do? You didn't do a full back test, but you almost 100%. Rarely is it this V shape. Okay. If it V shapes, whatever. You wait for the next stock or whatever. But you often get a reject here. You get this wasn't a full back test. You like to see this back test all the way to trend. It didn't do that. But you got a back test here. That's your opportunity. Okay. This pullback. That is how you buy the dip. Okay. And I probably should do like videos and articles on this, but you don't buy the dip when the chart looks like that. Because as we know, it can keep going down. You wait for the breakout. Some traders wait for 2 candles, 3 candles. I don't really care how many candles it is, but you got to break. You got up into the previous highs. You hit resistance at this is a very logical level to hit resistance at. It was resistance here, very logical area. Boom, you get your pull back on. That's when your buying hat goes on. And this one was tough. It didn't do a full back test, but sometimes they don't. So there you're just looking for areas of support. There was areas of support right there. Look at that. It was resistance at 120, support at 79, and that's how it played out on the breakout. And that was your buying opportunity. And then look, you kind of retested 79 again. So that's kind of what you're looking at technically. I mean, Datadog fundamentally, I will just say I like companies a little larger than this. I know $42 billion is pretty large, but I like, no, yeah, this is correct. Yeah, I mean, yeah, planes unfortunately tragically crash, and yeah, it's part of the risk. Part of the risk. GitLab? How's GitLab? $8 billion stock? I don't know too much about it, but it looks pretty good technically. I mean, as good as it could. I mean, it used to be 130. Now it's at 50. If you were to buy it here, I'd want to stop at 37. So I'd pay 10, 11 to the downside with upside to back into the 80s. When Jim Cramer buys the dip, you know, yeah, exactly. Thank you very much. I'm trying to teach people, trying to make you money. I mean, I want to make you money. Lloyd, we did talk about UNH earlier. I'm gonna hire somebody to do timestamps on these videos. I'll try to get timestamps on the videos, especially these longer ones, where you guys can go back and where we talk about UNH. But my thesis with UNH is they're spending more. People are spending more on healthcare. UNH is paying out of pocket. I'd rather buy the service providers than the insurers right now. There is an inverse Kramer ETF, or there's a newsletter. I don't know if there's an ETF. Folks, I'm not going to take any more of your time on this beautiful Thursday. We've got a lot happening in the world. It's Sentinel 1. Ooh, that looks ugly. Pulling into support, though. Thank you very much. You know, make sure you check out Aloe and Louis Vuitton websites. Might cleanse your palate based on what we've had happening on X. Elon Musk dropping the E-bomb, saying, have a nice day, GJT. Whew. Saying there's going to be a recession later this year because of Trump. And Kanye West being the voice of reason, saying that we love you guys both so much. I mean, there's a reason why I follow the stock market closer than anything, because it's one of the most exciting and entertaining things you possibly can cover. Business is exciting, and business and culture and politics all converge, and even like fashion and all this stuff. And this is why we do it. And this is why it's so exciting. And it's exciting because I have all of you watching. I appreciate it. Thank you so much. We will be back. Let's see when Oracle. I'm going to do we'll do an Oracle live stream, not O. It's a great company though. 6 days. When is 6 days? Pull up my calendar. Hopefully nothing crazy on my calendar. 1, 2, 3, 4, 5, 6. So June 11th. So next week we'll do another one of these. We'll come back for Oracle. Oracle's an interesting story. Beautiful technical pattern you're making here. You get pullbacks in this one. That'll be very, very, very exciting. Make sure if you're not subscribed to the Substack, would love to see you over there. equityempire.club. Make sure you find that. You can also, if you want to use Google, you can do like Equity Empire Substack or something, and it'll take you to that. Also, on all of my social media profiles, there's like this link tree thing, and you can find all my stuff here. The only thing I haven't really nailed down TikTok. I've got a bunch of kids that I teach and they're all on TikTok and they're like, Mr. Titters, your videos are great. You need to keep going. I'll figure out a format for TikTok. I like to post. Here's the thing though. I like to post something different on all the sites. I don't do a lot of like reposting. So if you follow me on X, you get something. You follow me here on the YouTube, you get something. You follow me on Substack, it's a little different. On X, it's a little bit different. Instagram is definitely different. I try to mix it up with on all these platforms. You get something a little bit different. So, and obviously everybody has their platform of choice, but make sure you're with us with our platform of choice. And if you're with TikTok, I promise you, I'm going to dial something in over there. I'm just spread a little thin at the current time. I'm kind of trying to keep track I am keeping track on 100 different stocks. And, we're just trying to make people some money and have some fun. Thank you very much. You guys are awesome. We will be back in 6 days for Oracle earnings. And that's a Wednesday. That's a tough one. It might be a little later. I might have to do it a little bit later. My son always has something on Wednesdays that we do. We got a little bit of a drive. So I sometimes sit in traffic on those days, but I will be back in 6 days. Until then, I wish you all the best of luck with your investments. Thank you so much for tuning in. I really appreciate all your support. And we'll see you guys tomorrow too on the main channel for the Fang Sucker Recap Show. Thanks again. We're out of here.